Umed, it's a pleasure to have you on. Thank you so much for joining me tonight. And I just really wanted to hit on a bunch of things over the life of Cardano. And you've been around for quite a lot of them. You're one of the original guys. Started out a podcast as well, I believe a couple years ago. Got a good interview with Charles in. You're one of the co-founders of PTOOL. You've been a stake pool operator since the ITN. And so I really look forward to picking your brain tonight. And uh, for those of you that don't know Umed, here's the floor. And if I didn't do a good enough introduction, then by all means.
No, Reagan, thank you so much. It's great to finally meet you and to talk to you. I know we've been in touch for over the years, and um, the circle back in the day was uh, um, much smaller, and it's great to see that you've persisted and you're around.
Yeah,
So
man.
these people didn't stay, unfortunately. Some really brilliant people I've come to know over the years. But yeah, you've done a great job. Thank you so much for having me. Yes, I have run pools. I have been part of the ecosystem in Cardano for as long as I remember myself now. Um,
Yeah.
but yeah, it's good to be here. Good to be here, and happy to talk to you.
Yeah. So right before we got started, you asked me about the news thing that I was running there for a little bit. It was called Cardano Times. And man, I started it up because it was back whenever, I guess it still kind of is, negative news only about Cardano. And nobody was getting facts straight, and it was extremely frustrating. So what I did was I linked up with a partner, and what we got a website where we just uh, scraped the web, got a bunch of different APIs put together, and any Cardano related news article would show up on our website. Along with that, we would also try to write our own. But man, I got so spun up in it, and there was a lot going on at the time, and it was it was me and just the one other guy, and I got so burnt out with it. But I just I couldn't keep it up and going. So lessons learned: just take your time and
It is such, it's like a full-time job. I unfortunately I had to stop, doing my podcast. I love doing it. I absolutely, um
your podcast slot leader.
the slot leader. Yes, I
Yeah.
met a lot of great people early on, and the idea was just to basically bridge the gap between the world of finance and blockchain technology, because there's these two disconnected worlds in my mind, and I thought that they should coexist in one way or another, because they're kind of, I think crypto is going in that direction over the past year. You could say that it's almost integrated. If nothing for nothing else, then it's from the flows of funds perspective. I mean, if you look at equity markets, they're up. Crypto is up. Equity markets are down. Crypto is down, and things like that. But I thought that blockchain had such a huge potential, and then just uh, using it or describing it as a place where you just store JPEGs and whatnot was just not doing it a great um, service. Now that being said, I've I've come to appreciate NFTs as an artistic form of expression. I think they have a merit to exist in this vastness of use cases that blockchain could support in the future. But I am still looking forward for those, you know, cases where real problems, real fi will find its way into blockchain technology. And my attempt early on with Slot Leader was to just basically find people who are saying, okay, here's a real problem in the world. And what I would like to do is to use blockchain technology and uh, the underlying principles that use verification, sending transactions and verifying these transactions, computationally verifying them, to solve my problem. And one of those was this concept called tontine. It's a very I think it's a very
Did I lose you? Is that mine or yours?
there you go. You're back.
Oh, there it is. Yeah, I don't know if that was me or you, but maybe it was
Okay.
me.
Okay. I don't know.
But anyways, you were talking about tontine.
Yes, the tontine. So the tontine concept basically it is about giving pension. The ability for people to actually accumulate a private pension, regardless of where they live and what happens to their economy in the world. So the founder was his goal was just to basically create something on the blockchain where you'd say, okay, well, I have this kind of an account, and then I'm gonna put in some money in there, and blockchain verifies it. It verifies my proof of life kind of thing. So you would talk to the representative that is managing your kind of tontine to get a proof of life. And then if you don't have the life, tontine, the way it works is that if you're dead, then your money goes to the next alive person. So as you age, it's kind of
Huh.
like it's an interesting concept. As you age, for instance, right, your nest egg gets bigger and bigger because other people are dying, and that pool of money that you need. Actually, as you age, you require more money, but it aligns the incentives basically. If you drop dead at 65, okay, you don't need the money to for the you go into the better place, right? That's just
Right.
that way. And and your money basically is in the pot. Your heirs won't get it. That's the only drawdown. If you were earmarking it to, like, basically say, okay, if I die early, then my kids could have it. No, that option you basically give up. But at the same time, you're gambling that, hey, I'm gonna live until like 90, and I'm gonna be the winner of this sort of cohort of people who came into this tontine with me. And I
I
think,
vaguely remember that.
yes,
Now that you bring it that way, it's almost like gambling on your own health.
yeah. It's kind of Hunger Games, in a way. But yeah, the thing is that then it uses the blockchain technology to give people pension, which is much needed. So anyway, over the years, I've accumulated all these interviews. Uh, I my pools in 2021, I sold my two staking pools to a company called Wave Financial. And I joined them as a head of staking, and my life has been very busy. After that, I managed a lot of pools, more than 15. And there's a busy amount of work that we a lot of amount of work that we have to do. That It's a long way of saying that creating a podcast or a newsletter is a full-time job, and you can't just have a job and then a podcast and a family. So
Yeah, no way, man.
I had to stop that, unfortunately.
No, it was a good podcast, and that's kind of the goal of this podcast. It's not necessarily like a beginner level podcast. It's more of the people that are already around Cardano, the people that have already known about Cardano. And so if you just want to get to know the projects, you want to get to know the people a little bit, that's the goal here, just kind of filling a void for the most part. But I mean, there's other people out there as well, like Kaizen or Pete or whoever that pay as well. They do interviews as well, but I like this one being a little bit more personal. I think that I think it's a little bit more fun just to get to know the people, get to know just who they are, what they're up to. Um, but yeah, man. uh, Again, I think that you've done a lot for this space. I think that you've done a lot for bringing Cardano along. So first, I just wanted to say thanks. Thanks for all your hard work with PTOOL, with setting up stake pools, uh, with your YouTube channel, with all of it, man. So
Oh,
thank you.
no problem at all. It's been a pleasure to actually be part of this community. And on the pool tool side, it's not me. It's Mike who's doing all the heavy lifting. He's a brilliant guy who created Pool Tool and asked me to join it. We had, Gabor, who was, on the mobile side. Unfortunately, he left, so it's just Mike and I at this point. But you know, it's a fruit of love. Let's put it this way. And I absolutely love the way that Cardano was designed in the beginning. I read all the papers. It's just the paper that you know the protocol that if I were to think about things really carefully, that's how I would do it. And then you start looking at stuff elsewhere, and you're like, oh gosh, why are they doing this? Could they not have thought about not having slashing at least, or locking
Right. No
indefinite
kidding.
period of time?
Just until we decide to fix it.
Or it was
Like,
6
oh my
months and then
gosh.
2 years, and it's now, oh, okay, you know we don't know.
Right. It's like that. I think I made the same joke with Kaizen. It's like that contractor that keeps working on your house. And you're like, hey man, how much longer until you're done? He's like, oh, 2 weeks, 2 weeks. And
Yeah,
it's just perpetually 2 more weeks.
exactly. So I mean, as head of staking, I have to basically look at different kind of technologies, and I see a certain potential in other protocols too. I mean, my recent one is Avalanche. I think it's the closest thing that I kind of see to Cardano in terms of its spirit. It's got a market, fixed cap. It's got that two sort of tiered approach to blockchains. The transactional layer and the computational layer. I love that. I don't know. We
Yeah.
kind of departed from we parted ways from doing things like that, I think, in Cardano. But maybe there are
I,
better ways of doing things
well, as far as
that
like
are
the
like that.
settlement layer and the
Computational.
computational,
Remember uh how Charles used to talk about the settlement layer that is deaf, dumb, and
right.
and
Deaf,
blind.
dumb, and blind. Yeah.
Yeah, it would say it basically work as the only things you could do is send and receive ADA. And
Hmm.
then he would say that, hey, if you want to do something fun with your ADA, you just transport it into the computational layer, and then there you've got all sorts of things,
Well, and I think that we're starting to see more and more of that. Like that's just the end goal, if you will, because and then like
but
yeah,
we already have computational layer on the base layer, which is like,
kind of yeah, just
there,
like
there
through
is no
smart
second.
contracts.
Yeah, because I was thinking that the base layer, he meant that the base layer is basically a blockchain that's running as a, as a, as a Bitcoin in a way. There's
Hmm.
nothing else, just basically sending and receiving, transactions. And then you have a side chain that connects to that. And that's the one where you have expressiveness of languages where you could do computations and things like that. And if you are let's say a person who doesn't want to risk his funds with anything fancy, just basically keep your basic stash in the base layer, and then if you want to do something exciting, you just go to the computational layer.
And I, I mean, correct me if I'm wrong, but I think that we're going to start seeing that with like Midnight. That's a good example of that. Mokamada is another good example of a side chain. And so the more and more that Cardano grows and the more side chains that we get, I I really think that we're going to start to see Cardano become that computational layer and that settlement layer. However, within the settlement layer, you're also going to be able to have the staking. You can also do smart contracts, things like that, maybe. But
Yeah. I mean, we will see side chains. I mean, one does not negate the other. It's just that the base layer already, in addition to sending, receiving, it also has the computational smart contract capability. So there's that. I mean, this is this is a an architectural decision that the engineers make at IOG that have vastly more information about how things work and how things supposed to look like. Maybe they came to a conclusion that this neat little picture does not make sense. The base layer could have computational capabilities, and then they went with it. So, but apart from like discussions, which used to be what we always focused on back in the day because there was nothing else, I'm actually quite interested in seeing the DeFi ecosystem actually blossom. I
Oh,
mean,
I love it. I love it, man. Like we look at any of these dexes. For example, I have a meeting with wing riders later on this week in a Twitter space. And so I mean it should be pretty fun.
yeah.
And then going on from there, we also have what Sunday Swap, Meld, or I don't know if Meld is no Meld's not uh, very active right now as far as I remember, but like you have Min Swap and stuff like that, all these dexes. But going forward, I think that Marlowe is really gonna open up the door to more of your world of things, the financial world of things. Have you gotten a chance to play around with Marlowe?
No, I haven't. I mean, in early in the day, I did. But I mean, look, to your point of like things becoming available that are on my side of the world. I talked to a project called Indigo.
Oh, dude, I love Indigo.
Yeah,
Yeah, I
they
love those
are
guys.
already in firmly in my side of the world in a sense. You know, on my side of the blockchain. You know, on the finance side, and because what they're doing is they're creating synthetic assets. These are derivatives of all these assets that they're creating. You know, let's say that you deposit. It's just you know it's just like the financial markets now in a sense, in a miniature way,
Because you
over
could
collateralized, of
so
course.
for anybody that doesn't know what Indigo is, go ahead and give them a brief synopsis of Indigo.
So yeah, the Indigo protocol is a protocol where you can create synthetic assets using ADA as a collateral. So let's say that you want to create United States dollars. You deposit, let's say $150 worth.
Uh-oh. Did I lose you again?
Lost you again.
Oh, there it is.
There you go.
Everything on my side seems like it's okay, but here, let me change. I'll change this background. We'll just go back to a blurred background. See if that helps out anything.
Okay.
Maybe it was
Maybe
just
maybe it's on my side. I mean, I have this weird camera.
I don't know. We'll get it figured out. Either way, it's not a big deal.
Okay.
But we were talking about Indigo.
Yeah, let's say the collateral ratio is 100 and 1.5. So you can deposit $150 worth of ADA and mint $100 of IUSD, which is like a synthetic United States dollar. And then you can take that IUSD and do anything you want with it within the Cardano ecosystem. So in a nutshell, it's an asset-backed synthetic United States dollar. Now, there are several things that could happen that make this position that you have either callable, or if the price, let's say, of ADA goes down and collateral ratio, let's say the collateral minimum collateral ratio is 110, and you've deposited 150, you withdrew 100, um, uh, and if the collateral ratio, because of the price of ADA, goes down to 110, then you become eligible for liquidation if you do not if you do not put in more ADA at that point, or return your IUSD to redeem for your ADA, then somebody else will go ahead and do that to liquidate your position, and then they will earn a commission for doing their job, cleaning the books, and basically that position gets liquidated, and then the system will be on stable again. So the reason why these products exist is that not everybody wants to sell their ADA. It's taxable sort of event. But they want to have access to dollars. And then, in the real world, in the traditional finance world, you just basically borrow against your positions, and then you pay interest. And then if, exactly just the way that, the Indigo works, in traditional finance, also you get these, margins. Uh, you know, there is a sort of over collateralization there too. And if the value of the portfolio falls, below a threshold, then you will get a margin call and whatnot. So, but anyway, the reason why people want to do that is because they want to use their portfolio to, pursue economic opportunities also, or at least, keep it, stable, um, a portion of it at least stable.
Yeah,
So
I think that that's a great point. And so the Indigo guys are also there at Rare Bloom, and I got the pleasure to talk to quite a few of them, and they were saying that there was a need for synthetic assets because they didn't want something like the Ethereum ecosystem with bridge hacks. Because the problem with a bridge is somebody brings it in, somebody like buys Bitcoin and then brings it over a bridge and then has wrapped Bitcoin on the other end, right? And so the problem is that there's a custodian of the actual Bitcoin, and that's where the hack occurs, is on that custodial level. And that's where a lot of their bridge hacks happen. And so
it,
they said that a synthetic asset, you just use the oracle to determine the price of that other asset, and then it's basically just a derivative of that asset, whether that's
it,
dollars or Bitcoin or whatever. Sorry, I didn't mean to keep going.
yeah, no, look, the difference there is that you still basically deposit one asset, um, but you deposit it in the case of Indigo, you deposit it with a smart contract, and, assuming that that smart contract has been, reviewed and all that, and that smart contract exists on the chain. So, um, and then you issue something else. It's kind of like a bridge, except that, there's no like one person or two people actually having the master keys that could just, siphon the money and then run to the Cayman Islands or something like that.
Or the
Or
Bahamas.
Bahamas, or Bahamas, yeah. And or there's just not, there isn't a way for any single person to manipulate the smart contract and take the funds out, the way that, people have been able to do with, with these hacks that have happened, because the way I think they have to construct these smart contracts, in people make different kind of design decisions about these things that kind of backfire when they become hackable. Let's say that, if somebody has access to the right to interact with the smart contract within an organization, that's a honeypot, and that creates, a huge impetus for hackers to basically try to get into that smart contract or the wrapper, or whatever form it takes. Actually, it doesn't have to be smart contract.
Right.
In a way, I would say the centralized way of handling it is probably, could be viable, more viable. There are, for instance, the I think you could basically take, United States dollars, and the USDCs basically is kind of a backed, um token, right? It's not a wrapper. It's like, okay, you can call it a wrapper for actual US dollar. It's an ERC20 token, right? And there's one entity, you put in real dollars, and then they create these tokens for you, and then you could just take these tokens and go places or not. But when you use bridges, then things become very unstable. I think the technology is not very proven yet, which makes it, very, um it makes it risky. So I've never touched the bridges. I'm glad I haven't. Well, maybe I have in a couple of occasions when I was going degen with various tokens back in the 2021.
Right.
Right. But yeah, not big amounts. Yeah. So yeah, this is a new way of doing things, and I'm looking forward to this ecosystem to actually start developing. Indigo is actually one of the first impressive ones, I have to say, because to this day it was just dexes, and do we have a lending protocol live? I don't think we have a lending protocol that's
I
live.
believe Lending Pond.
Oh, there's a lending pond. Okay.
Yeah, I believe that's their name, is Lending Pond. I haven't gone on there, but I know that a couple of people have put up their NFTs for collateral. Uh,
Yeah.
and so I mean, it seems like it's pretty cool. And like I know somebody put up a space bud, and they wanted 2,000 ADA for like 10% and a month or two, and that's it. And so they were willing to give up the 10% over just a month or 2 months because they thought that they could make more money trading NFTs, and then they were just using their space bud as collateral. And I was like, that is definitely over collateralization. And it's a little crazy to try and do that over 1 month at like whatever percentage they were doing. But if you think you can make more trading NFTs in a month than 10% of 2008, then go for it.
Yeah, I mean, look, NFTs are another form of asset anyway. So whether it's ADA or something else, it's just basically it's collateralized loans.
Mhm.
So
So
yeah,
what are your, since you're a financial guy and you can give financial advice, right? Especially over the internet.
no, 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 I can't. Unfortunately, I can't.
No, I'm messing with you. I know you can't.
Yeah, so
S
I have to. I should have given you guys that disclaimer that anything I say here is not financial, tax, or legal advice.
Here, we'll
Um,
just well,
but but
go
no, I
ahead.
mean, no, there's many things you could do, but whenever you're making financial decisions, you always have to take into consideration your own risks and financial situation. It always hurts to see people lose money. Um, to which kind of is a nice segue actually to talk about the things that have happened this year.
There you go.
Oh, nice! I like that. Um, so all these things, all these um, calamities that have happened in the crypto actually don't stem from crypto. They actually stem from the opaque structuring of traditional financial world. Uh, which crypto is supposed to fix in a sense that your books are more or less if crypto had its way, then every transaction that you do, all your assets, all your liabilities will be on the blockchain, and there will at any point in time you would be safely you would safely be able to generate your uh, wealth report and hand it to any bank, and it will be verifiable. Um, Now we're not there yet, and the financial entities, the traditional finance entities, they work in the traditional finance world where the books are kept by accountants, liabilities are recorded through the multiple layers of legal documents, and in some cases, people don't really know what their liabilities are and what their assets are until it's too late. Um, which is why we've seen some quite wild iterations and takes from very prominent sort of players on the institutional side. Everything is happening on the institutional side, of course. So these people are professional risk takers. They're supposed to know what they're doing, and but even then, they couldn't probably predict the black swan event that FTX or Three Arrow Capital was. So
Mhm.
um coming from the financial industry, traditional finance industry, just I keep reminding myself why people are very skeptical, and that's because you can't believe people, or you can't believe your counterparties when they present you with information. And if you do believe them, that information gets stale really fast, and which is always a problematic thing when you're dealing with large sums of money. Like imagine you give a loan to an entity X, and then they go under.
Yeah,
You
not
know,
so good.
yeah, and whatever, and then they can't pay you back, and then you have to kind of take a haircut. So it's always unpleasant, and I'm sure that the institutions have a way of writing these losses off. So, but
Oh yeah, yeah.
it's
They have all sorts of ways.
yeah, it's just the extent that the traditional finance, how embed they were all with each other, is just basically staggering. I mean, it is to be expected because finance works like that. In finance, everybody kind of works with everybody else in a way. So you basically kill one entity, and then all of a sudden you see like 10 cross defaults, because if one guy took the loan from the other one other guy, and then that guy took the loan from some other guy, and then you know all these books are so interrelated. It's
Mm-hmm.
kind of a domino effect. If one of them falls, then there's a cascading sort of defaults, and that's what we're seeing actually play out at this point. With FTX not being able to service, I don't know, their liabilities were orders of magnitude before, greater than their assets.
Yeah,
And
for anyone listening and they want a rabbit hole to go down in, uh, just just do a quick Google search as to maybe something like federal banks rehypothecation, something along those lines, and then that'll take you down a nice little rabbit hole for a couple days. And so you're going to see that we're about what, like $4 quadrillion in debt, and we don't even have that much money in circulation. But everybody just takes out debt and then lends to the other person and lends to the other person with a fraction of what they have. And oh, I can put a deposit down with this at 10%, and then so on and so forth. And the banks do that with each other.
I mean, this fractional reserve banking is the cornerstone of modern economy. I don't want to kind of diminish its existence, because this is how the actual world works. There's this concept called money multiplier. So for every dollar that the central bank prints, um, the the financial system creates, if the reserve requirement is 5%, for every dollar the economy gets like $20,
Mm-hmm.
because what the banks do, and they always have the ability to create more money. They take this $5 or $1, and then they basically put 5 cents in the book, and then lend the 95 cents to somebody else. And then that somebody else, let's say their client, takes that 95, and then they put, let's say that there's only one bank, they put it back into that same bank. And that same bank basically says, whoa, that's a new deposit. So we're going to take 5 cents of that, or 5% of that, and then 95% we lend it to another person. So long story short, for every $1 you get basically 20 liabilities, $20 liabilities and whatnot. So,
Yeah,
and that's how the economy, the expansion works, and then it works the same way on the back end. So if you want to contract the money, you basically say the requirement is not going to be 5, it's going to be like 10 or something like that. And then the banks will have to kind of like reduce the amount of credit out there to meet that reserve requirement. Um,
Yeah, one of the craziest things to me that I saw was that whenever we had COVID first happen, we one of the first things that the Federal Reserve did was they took off that minimum reserve off the banks. And normally it was what, like 10%, 5%, something like that, but then they just took it away during COVID. And I don't know if they ever replaced it or not. And so I look at all this inflation, I go, "Well, duh, you guys took away the reserve. Put it back."
yeah, I mean, I think when COVID hit, banks couldn't do anything on their arsenal to actually fix the core of the problem because it was stemming from a an exogenous event in China. It had to do with the health of people and how the governments actually reacted to that pandemic. Um, and it actually affected the supply lines rather than the demand. And then, of course, when it came to in the beginning, and it came to the United States, and people started basically,
You there?
and
Okay.
um and then what happened was that the central bank basically said, we'll just flood the market with a lot of liquidity, and so that the demand doesn't collapse, because it was such a huge shock that if they didn't do anything according to them, then things would have gotten much worse. um, I think the size of the whole package was just too much, because now we have to, like, take it out,
Mhm.
and it will take, if you take it at a faster clip, you will cause recession. If you don't take it at a faster clip, then you will have another, your inflation is going to be out of hand.
Oh,
So
yeah. So what do you think about, like, what England's doing right now or the UK is doing right now, where they're like, "Oh, yeah, we can just give out more money." And then everybody else is just thinking like, what are you doing? What stop it."
yeah, we are getting into the realm of, like, savings are not important. You should be happy that you have salary or something like that, which is like really ridiculous. Rhetoric coming from the fringes of economic thought. Um, yeah, we kind of had that, right, with COVID. We started getting all these paychecks, not paychecks, but COVID payments or whatnot, which
Yep.
was really weird, deposited into your accounts. And that gave the economy the boost. I mean, if your goal is to fight inflation, you don't give people more money to spend. I
Yeah.
don't know. I
I
don't know.
I never took any of that money as real money. I just took it and threw it into crypto, like, immediately, because we had that black swan event with COVID, and so ADA went from, like, I think it was like 6 cents down to 2.5 cents. And so immediately I was like, Cool, you're gonna give me this extra money." Threw it in there, and I think it was ADA was like at 3.1 something, like, at that time. So, uh, if a person did that, here, let me do this again. So, if a person did that during any other time that we get uh, a stimulus check or something over the last couple of years, it still would have been a 10x. So your 1,200 US dollars turned into 12,000 US dollars. Um, but know the risk if you're going to do that. If you need the money because you're out of a job or something, then definitely don't do don't do that. Use the money for what you need it for. But yeah, they went crazy with all their printing and everything else. But I mean, yeah, the whole U.S. system is just of modern monetary theory, and the debt doesn't matter. And I don't know, it just kind of goes against all the principles of Bitcoin, Cardano, even Avalanche or any other hard asset that has a cap to it.
there is a an inherent, I'm beginning to realize that
No,
there's
you
an
said Algorand. I'm sorry, not Avalanche.
no,
Uh,
Avalanche.
oh, is it
Avalanche.
Avalanche? Okay, yeah, I
Yeah,
was right then.
Algorand has no cap on their
I
issuance.
always get them confused.
Yeah. So
Sorry.
so Avalanche has 720 million, I think, uh, as a max supply. Algorand has you know a max supply of 10 billion for the first 5 years, and then what happens later, nobody knows. So it's like
Mm.
something that you know uh, that is an unknown, and basically as a long-term investment, I don't feel that part of the equation is yet solved. So maybe they have a different monetary policy, or they have other things that make that ecosystem uh, think about their economic policy differently. And again, this is the one of the greatest things, side effects of blockchain technology, the crypto in general, is that we get to experiment with monetary policies.
Oh, it's
Now,
awesome.
right? So
I love it.
before blockchain, if you wanted to experiment with something, you had to invade a country and become a president, and then you say, okay, well, in this country we'll do things differently. It's very expensive to do that. In a blockchain, you create a chain, and then you say, this is the monetary policy of this blockchain, and we believe this is the right way to do things because X, Y, and Z. And then the next guy sitting next to you will say, okay, well, we believe in this other monetary policy, and that's through experimentation. You probably will end up with some sort of an interesting mix. There are blockchain um, there are platforms out there. I think Harmony One has that. They have a fixed emission.
Oh, I don't know what's going on. We will have to figure this out. Let's see.
Yeah, everything looks okay on my side
It
here.
does? Okay, maybe
Yeah.
it's just me. I'm gonna have to check out my laptop after I get off of here, and if it's looking bad to anyone else, then sorry about that, guys. Let me go ahead and make sure everything else is
Yeah,
all cleared off of here.
it's fine. I mean, it's a friendly chat, I guess, right?
Yeah, man.
Yeah. No, look, I wanted to finish this thought because it's important,
Oh
because
yeah, please.
there's this platform called Harmony.1, and then they just basically, yeah, let's say you start with 100, and the first year emission is, basically the emissions are constant. So let's say that the first year they issue 10, and then at the end of year one they have 110, and then the second year they issue another 10. So every year that same 10 becomes less and less of the total. So the first year it's 10%, the second year is a little bit then 10, a little bit less than 10%, and then the year 5, 10, it's going to be like 3 to 4%, and then but that's another basically way of having a diminishing inflation without having a cap on supply. And they, you could argue and say that blockchain needs to have a constant supply of new coins to encourage business activity. Because imagine if like everybody hoarded ADA, and they said, I am not going to spend it, I'm just going to keep it, I'm just going to accumulate it. But you need the ADA in order to like fund the smart contracts, right? And then what's going to happen? Actually, I know what's going to happen. What's going to happen is that the price for computation would have to go up for me to like basically sell my ADA to you, or just make it available or whatnot.
Mhm.
So so um so in that like, for instance, like I'll give you a case, an edge case for your dollar. in 1970s or whatnot, the calculator that came out, or the 50s or 60s, I don't know, the calculator was like $150 or $200 because it was new technology, and people bought that. And then as the technology improved, um, and $150 in those years was a lot more
Oh
than
yeah, because you had a
yeah.
$35 ounce of gold peg back then.
Yeah, so let's assume that that's in today dollars, it's probably like 6,000 or something like that.
Sure.
For a calculator. Now you can buy a calculator that you would have paid 6,000 for $2. So and the amount of, even though the amount of dollars that has been in circulation has grown so much, because of the inflation, let's say, over the years. Um, but the technology was even made this whole thing cheaper faster, because the technology flooded the market with calculators. And at the end of the day, it's just the, what is the price is just basically intersection of two, supplies and demands.
Mm-hmm.
And like there's more calculators than there are dollars, and people basically, not more calculators than dollars, I'm sorry, but the there's more calculators than there was before, and because there are so many of them,
They just
and these
cost less.
yeah, and then because they are so cheap to produce, that they go for $1 or $2 and still make more money on these things. So the same thing goes with, like, a Bitcoin or ADA in that regard. You will if there's a lot of economic activity, then instead of saying that I'm paying like $5 or 5 ADA for a transaction, or a, let's say, a smart contract or something like that, to ADA, you will start paying less and less in ADA terms, because there's more transactions, and then there's a finite amount of ADA out there. So the price will have to basically go up in a sense, and then you'd be paying things in Lovelaces rather than ADAs and whatnot. So we'll just go down that, in
Yeah,
that
I mean,
decimal.
yeah,
Yeah.
I think especially after we add on layer twos, and you can you can factor in a bunch of different transactions prior to a true on-chain transaction. So you end up with those transactions within transactions still just being around 0.17 ADA. So then that would still drastically reduce it. Um, and then now we also have Hydra coming online. Sunday Swap is bringing that with them, and they had a little display with Hydra, and then now we get what else? What else is coming in outside of
I think
midnight? Oh yeah,
liquid.
yeah. I mean, just like tons of different scaling solutions are starting to come online, and so I think to your point that um, well, like Metcalfe's law is more like transistors or whatever, but I think that you can really apply it to almost technology as a whole. And so the same way that you were comparing calculators, I think that you're going to be able to do that um, with
Well, we have 12 years of data with Bitcoin. I mean, like,
right, exactly.
right?
And
Look. I mean, it started with 10 cents, and it just ballooned to what, 66,000, and then it went down, of course. But if the trend continues, the only way that this network could actually survive, I think, is for the price to go up, because there's the miners will be getting less and less Bitcoin, right?
mhm,
So for the miners to actually make money, the price of that Bitcoin has to go up for them to pay for their costs, and still be profitable. So uh, if the price doesn't go up, and if the price doesn't go up for an extended period of time, then Bitcoin is at the risk of collapsing on itself, because then it becomes less profitable to run it. Then the miners will exit the network. The exiting network means the hash
hash rate
rate
goes,
is going to
yep.
go down. Hash rate goes down, means that it's less secure. If it's less secure, then people will be able to hack it, I guess. I don't know. So
Yeah.
if the hash rate is let's say 10% of what it used to be, then any big guy with a lot of hash rate could come in and start fiddling with it, and
Yeah, I mean, and that's we always like to say that these protocols are trustless, but what we're doing is we are like with Bitcoin specifically or proof of work specifically, we're trusting that if the miners are mining at a loss, that they're just not going to sell and claim the losses and then shut down for a period of time. And then all that would do is uh if they shut down, then that would decrease the hash rate, and the hash rate would make it easier, I guess, maybe more profitable for the other miners. But then you would decrease your break even, which means then those miners would sell, and then you're in the downward spiral, maybe.
yeah, I mean, it's a hard problem to just sort of visualize and take into consideration all the factors. I'm not saying that this is exactly how it's going to play out, but it's one of the scenarios, right? So for Bitcoin to survive, it has to go up. The price has to go up, which actually makes this thesis, if you believe in it in long term, a very easy one, because you can say, all right, well, in order for Bitcoin to actually survive like 10 years, it will have to like go up in price so that the miners can actually support it. And if it doesn't, then it becomes a problematic thing, and if it doesn't, then let's say that it doesn't. Now let's just explore that side of the thing, right? If it doesn't, then very, very efficient miners, or the players that probably don't care about profitability, would end up inheriting the network, and having really, really strong machines, I guess, because um, and then they can have ulterior motives to do that. But yeah, I mean, we've avoided that calamity, thankfully, even though people say that Bitcoin network can be manipulated by 4 or 5 players, things like that. But I think if I'm a miner with that much, with, let's say, a significant mining power that could subvert the network or the consortium of miners, I always do the future benefit of running the network is probably going to overweight outweigh any damages that I could any economic uh, you know benefit that I could have by attacking the network, which is why it's running and it will probably run.
Yeah, I agree. I think that as demand increases and supply stays roughly fixed because there's very, very few Bitcoin actually being mined on a daily basis with new Bitcoin. So as long as that new supply outweighs, or as long as that demand outweighs the new supply, then price goes up, and that's just simple.
Yeah, I have to say that in the financial world, there are ways to have actually exposure to Bitcoin for the purpose of speculation without actually having to hold the physical Bitcoin at all.
So then that brings. I'm sorry. Finish your thought real quick.
Yeah, so what I'm trying to say is that the argument of scarcity doesn't apply for, I would say, for traditional markets, because you could print indefinite number of Bitcoins uh, on the paper that will behave as a Bitcoin, but are not Bitcoins. Indigo did that, right?
Hmm.
With US dollars, USD, IUSD, I think they call them.
Yep. Or Grayscale's GBTC for
Well,
the Bitcoin
Grace,
futures.
isn't Grayscale's GBTC it actually holds Bitcoin, right?
It does, but I believe their ETF is futures, and I believe they were actually trading down something like 45% off of Bitcoin itself. and that's why
Um,
there was liquidation fears around GBTC.
I think their reserves. I mean, people have questions maybe about the quality of their reserves, but they're supposed to be backed one to one.
Yeah,
But the thing is that you could have a financial contract and say, um, I will buy a synthetic Bitcoin, and I will buy, I don't know, 1,000 of them, and you don't even have to go to the market to buy the Bitcoin. Because it moves as a Bitcoin, and then you don't have the risk of that asset moving. Um, when you create a Bitcoin, synthetic Bitcoin that is backed by something other than Bitcoin itself, then you're taking the risk of decoupling of that asset with the price of Bitcoin. So you
uh,
have to always pick something that moves more or less in the same vein. So
is that
um,
kind of like buying gold certificates versus gold, like
no, actually,
physical gold?
yeah, gold certificates are also supposed to be backed, right? By gold. Uh, but as long as the institution that is selling them is liquid or trustworthy, then for you, some financial intermediaries or the financial institutions, they don't care. Like maybe they do care a little bit about what's backing that synthetic asset, but as long as it works, they wouldn't care if you actually hold the actual Bitcoin. You could actually hold Ethereum or Cardano and say, you know um my synthetic Bitcoin is backed by a combination of US dollars, metals, and whatever you decide to actually put in that basket, to be honest with you. And you could put it, if you do it if you do over collateralize it, then you basically take the risk of those assets moving differently a little bit off. But anyway, so there could be more synthetic Bitcoin out there than the actual physical Bitcoin, in the financial markets, because if somebody wants it, the financial markets will create it for people. It's unfortunate, to be honest, because if everybody wanted to actually have the Bitcoin and hold the Bitcoin, then the price would have gone up even more. But because there are ways to get exposure to Bitcoin without actually holding Bitcoin, then that pressure abates a little bit.
Yeah, and so I think that brings in a good concern as far as like supply and demand, um, and then also regulation. So, do you think that there will ever be a regulation where you have to have a certain reserve of the asset? You can't just make a promissory note, but you actually have to hold a certain thing, kind of like how the regulation around banks, they have to hold a certain percentage of dollars versus lending out dollars.
Yeah, I mean, look, these things are regulated, right? So there are things you can do, you cannot do. I'm not privy to all the things, but if you're saying that your Bitcoin is backed one to one, then you better have that.
Because people
Otherwise,
could prove it.
yeah, no, I mean, I do have a great faith in the public markets, um, because um, they're regulated by SEC, and SEC does its job of checking the papers and things like that, and make sure that whatever you claim is true. And as a public company, there's a lot of scrutiny, and you'd be a very dumb criminal to actually try to um, I don't know, cheat on the public markets. But if you're a private company like FTX and whatnot, then I don't know, and
Yeah.
and you're based somewhere where there's not a whole lot of regulation, then they did something that was, if true, is just basically immoral and illegal. It's supposed to be illegal. It's like you
Oh no, it's fraud.
you yeah, you took the deposits of exchange, clients, and then you did things with it there is you supposed not to do.
I
um
mean, if the people from, I mean, it really brings up interesting questions. So number one, they're not a US company. FTX is not. They are a Bahamian company. However, FTX US is. So from a regulator standpoint, I think that they would only be privy to FTX US and anything that affected American investors. Um, and whether or not American investors like went after or invested in FTX International, if you will, then maybe that's their in to start looking into FTX from the Bahamas. But I don't know.
Yeah, I
That's
don't know. I don't know how true that is, but I heard back in the day that in the U.S. you can get prosecuted in the U.S. Excuse me. If, even if you didn't commit your crimes in within the U.S. soil, as a U.S. citizen, if you go somewhere else and then commit crime, and that country doesn't, let's say, prosecutes you, then the U.S. could.
yeah. I mean, if in my opinion, if the people from Tornado Cash went to jail, the people from um, Enron back in the day, if they went to jail, then clearly anyone having ties with FTX is the probability of them being indicted and convicted is relatively high. Um, and I would just say, just from looking at it from that vantage point. But I don't know. I'm not a lawyer. I'm not an attorney. I'm not anybody that's ever prosecuted this before. So it'll be
Yeah, I mean,
interesting to see what they do.
these are all speculations at this point because we don't know the details and how the defense will play it out. But
Oh, of course.
I wouldn't be surprised if they got, you know, he went to jail because the staggering amount of money that was lost, quote
Hmm.
unquote lost, right? So,
Yeah,
um,
and I think
yeah,
that it's a completely different situation than, let's say, like what happened at Celsius. Because at Celsius, they they went to where like they went bankrupt. They just couldn't cover all the loans, and I think that's a completely different situation versus FTX, where it's just blatant fraud.
yeah,
Um,
they just took the money, right? So,
yeah, I mean, there's no real defense for that. I don't think, at least, but we'll see.
yeah,
Um,
they gambled with. Looks like they gambled with depositors' money and then they lost. So,
yeah,
well, we'll
well,
see. We'll see what happens, but. Yeah, so there's a lot of stuff that happened this past year, and most of what happened, except for the Luna, the other all the other entities were all centralized entities, and whatever happened had to do with the way that people at the helm actually made these decisions, and of course the market forces.
oh yeah,
But I mean, like if I'm a player in this industry and I've been here long enough, couple of cycles, you always keep in the back of your mind that the price goes up, price goes down significantly, and then it
hmm
stays there for a while. So you
yeah. So if
kind
you're
of
gonna take a if you're gonna take a loan out on your crypto, now would be the least risky time to do that, in my opinion. Like,
yeah.
or at least closer to the least risky time. But um, don't do that during the bull market. And I mean, at least not at the end of the bull market. Goodness.
Yeah,
Like if you
that's
think that we're once you see Dogecoin pumping and Shiba Inu pumping and all these other meme coins pumping, it's like, okay, that's that's the signal. That hype is here, and that's not
Yeah.
the time, in my opinion, to take a loan out against your crypto, because it'll crash. It'll crash 85-90%, just like we see it now. And so, completely transitioning, there's something that I wrote down here, and it's a conversation that I had with the guys over at Drip Drops, and Kyle specifically, whenever I was asking him about Babel fees, and he was saying from a stake pool operator's perspective, Babel fees are just going to be a tax nightmare. And I just wanted to get your perspective on that, and see uh, what you thought about the tax implications, specifically in the U.S., surrounding Babel fee transactions in the future.
Yeah. I mean, I haven't given it too much thought yet because we're not there yet, as far as I understand. But the pool operators, they have an ability, I guess, if this was implemented the way that I envisaged it, or at least understood it, is that every pool operator will have a switch and say, okay, well, I want to get paid, um, in addition to ADA, I want to process transactions where I get paid, with, I don't know, space coins, or USDA or something like that. And so you will have, in addition to having rewards for your um, in ADA for your work, you will also start having rewards in all these other tokens, and the degree to the with which they move against ADA or US dollars will create these kind of nightmare scenarios for you. So
I mean,
I guess that's the I don't think this is something that I know, like anything that could come our way, the software could solve it, because let's say that there will be a software that will calculate all these cost bases for you and then dump everything into your tax form. It will be a headache for the IRS, I tell you that. It's much easier to basically classify this as a currency and don't have to like worry about the cost basis, for every single little transaction that you make. I think that would have been a much more prudent way of handling it that wouldn't require precious resources of people who try to catch criminals or whatnot. But yeah, it could generate a lot of unnecessary sort of transactions,
no, I agree. It,
reporting
it,
reporting requirements.
yeah, I mean, you look at your, like, you would have to go back and you'd have to look at what the token was on that specific day at that time, roughly, that you received it in whatever your taxable currency is, whether that's dollars or what have you. And then
Yeah,
you'd have to factor in, okay, well, there's that price then, and then if you ever if you ever sold it
sold it. Yeah,
for ADA, or bought an NFT with it, or sent it somewhere else, traded it for whatever, then it's a mess. It's all a mess, or at least it could be. Um, but I think that also plays in well too. Um, Looking down the line, you had previously mentioned what you thought, vaguely, what you thought that the future could look like. So what, with crypto in the picture and blockchain in the picture, not just Cardano related, but blockchain as a whole and crypto as a whole, where do you see crypto going over the next 10 years, 15, 20 years? So how are we using it? How are we interacting with it? And just what do you envision?
yeah, that's a very profound question, Regan. It's I think about it a lot, actually. And as exciting as the next shiny big thing that happens in blockchain, that is kind of inherent to our own ecosystem. I still believe that there is a large swaths of untapped potential out there that haven't been realized because we have been so preoccupied with our little kitties and whatnot. So I in 10 years, I think we will start seeing um, a greater adoption of blockchain use cases. We're seeing the first attempts already, right? Like when Cardano announced that they're gonna store diplomas, credentials. That's a use case. Um, when the Georgia wines can be traced using the Cardano blockchains and whatnot, that's a use case. Um, and I see going forward an increasing number of these use cases coming into our reality, and then all of a sudden it will just become part of reality, and we will stop questioning its validity or usefulness.
And we're just going to use it and not realize that we're using it.
Exactly. I mean, from membership cards to the titles to your house could be all in blockchain, and the infrastructure needs to be built to be to actually take all these vast amounts of data and transactions. I think we're not there yet, but one day we could just wake up and if you want to sell your house, you just put it on the website, Web 3.0, and then you sell it just like an NFT.
That would get really interesting. Partial ownership of a house, kind of like partial ownership of a painting right now.
You could actually sell
I mean, we have those with
sell the rights
townhomes.
to your own income also, or something like that. You can say that, hey, I need money right now, 1 million, let's say, but I commit to sell to give you that 10% of my income until the age of like 70, or whatever that income is.
That's interesting that you say that, because I had that exact same conversation with somebody else, and I said, especially with college athletes, not professional athletes, but you can speculate on college athletes, and they can sell off, um, let's say 5% or 10% of their professional career if they make it. And so you, as the investor, you're taking a risk investing in them, but if it pays off, it could pay off huge. And for the college athlete, they receive the funds right now. Maybe they want to purchase a car or pay off their student debt, or if they have any, um, or buy their mom something or family member something. Maybe they have medical bills. Who knows? There's a million
Absolutely. I
reasons
mean,
to spend money.
it is even now. I don't know the intricacies, but even now could be done. But the logistics around it and how things are set up are cumbersome.
Yeah.
Imagine like being able to do that. If you have an ID on the blockchain, you say, excuse me, um you say,
No, it's
here's my
cold season.
ID.
It's fine.
I know, I've had a terrible cold. So imagine, you imagine your financial um entire financial life is on a blockchain. It's encrypted, let's say, or at least anonymized, so nobody knows that it's you, unless you just basically sign something and show as a proof. But in and you say, I'm going to the market, and here are my assets, and I am applicant 123. The bank 231 basically looks at that applicant and say, okay, well, he's had this stream of income, blah blah blah. Let me get in touch with him. Sees the risk profile of an applicant, and then maybe they start talking about, like, in person, and then realize that that's an athlete, and then once the deal is finalized, more or less, you can um you can basically say, here's $1 million or whatnot, or whatever the amount is. But the bank could say that, oh, here are the conditions you need to meet in order to actually get it, and this loan to be valid. You cannot just basically quit school or quit the career because that's what we are banking on, et cetera, et cetera. And you could put any kind of like restrictions you want actually in there, and it will basically be the it will be an agreement between the two entities, a contract. But it could be just basically a template, if there's a market that exists for these kind of things. You can say, salary loan or something like that. And it would, or salary equity or something like that. You just basically pre-sell your, lifetime employment, 1% of it. It's kind of sad, to be honest, if you have to
How
do
is
the,
it sad? Just to sell off partial of your future?
yeah, it kind of gives off the vibes of slave ownerships and whatnot, because you are 10% of your income is owed to somebody else, and
Yeah, I
forever,
mean,
right? It's like kind of an
yeah,
equity. It's not even like debt you could pay off.
but let's
It's
say,
equity, right? Like
yeah,
if it's equity, then somebody owns you, and there's
yeah,
I mean, there's
I
a
mean,
price you could pay to buy it back, but it's just, yeah, I don't know.
yeah, and I mean, it's looking forward, anything that can have value, I think will have value. And I think that somebody's athletic career or somebody's startup or anything like that, um, all of those things will have value. And if you're selling off a portion of that now and you need the money for it, um, I think that if you do it correctly, even as a, like, let's say an athlete, since we're using that as a thread right now. So let's say you sell off 5% or 10% of your future for $1 million, and you are this star college athlete. I think that you are protecting yourself if you get injured, like severe injury or something along those lines. So you're collecting some money now, or you're also collecting those funds now so you can also invest them. And maybe your $1 million through good investments that you sold off now turns into $50 million by the time you retire. So then you just actually doubled your salary, or your lifetime earnings, maybe in that field. Who knows? Like, the future could get crazy.
Yeah, so look, I mean, I'm all for. I mean, like if people want these kind of options, I'm all for it. But I mean, I kind of start thinking about people who do not have much, and then one day they wake up and they say, "I want to
I've
sell 90% of whatever make I make because
Yeah,
um,
and that's the
I
danger.
yeah, because I need that $200,000 that that amount that it amounts to. So let's say that if I don't make that much money, and if I need 200,000 because let's say that I was unfortunately I got cancer or something like that, and or my family has cancer and whatever,
Right.
I have to take a loan. Then some people sell their kidneys, other people might sell their lifetime
Their labor.
employment. Yeah.
Yeah,
So
that's a
yeah.
great thing to think about. Like, that's a great counterpoint. And I forgot who I was talking with, but I was talking about um tokenizing different things and giving things value. And it was along the lines of uh, and then they posed a counter argument, kind of like how you did, and it was something to the effect of, just because we can do something, should we do it? And what are the negative aspects of doing that? And I think that it's really an interesting take, for sure.
Yeah. Yeah. I'm interested to see how this space develops. I definitely don't want to. Uh, I don't want it to develop in a direction where, anything goes and people start suffering because, they don't have economic, you know opportunities, and they have this blockchain technology facilitating things that, otherwise would be out of reach. um but at the same time, I'm excited about the things that it can solve, and it will solve. Things like, making loans available to pretty much anybody who would probably want to have them.
Yeah, that part's going to
Loans are
be
different.
awesome.
Yeah, loans are different. You pay them off, you're done.
Yeah.
As opposed to like equity in your future income, which it's
Yeah.
kind of like not
That
really.
part gets kind of crazy.
Yeah, yeah. Um, but yeah, in case of loans, for instance, right? I would love to basically be able to log into my Lace wallet, which I think they did this demo and on in Bloom, where you basically go into the marketplace rather than a DeFi marketplace. You go to the real fi marketplace and find a farmer, and the farmer. You read about the farmer, you see what the yield of the farmer is, and and then you look at their cash needs, and then you allocate a portion of your capital to whatever they need, and then you start collecting pretty good interest backed by actual economic activity in country X. I
Yeah.
mean, that is fascinating.
Yeah, and I think that once we combine uh, digital IDs or decentralized IDs, you combine that with Marlowe, which makes financial contracts easy, and you combine that with an easy to use platform that connects people, and then now I think that you really have something, and now you can build a reputation. You can uh, and anyone can do it as long as it's a verified ID, or and you combine it with also Midnight, which is the privacy network. So if you don't want your loan to be public, if you don't want your actions to be all over the place, then yeah, you just do it over there. So I think that it opens up a whole new world of possibilities for the crypto market and for the financial market as a whole. And I'm excited to see how people are going to use it. I'm excited to see how people are going to leverage it. I'm excited to see um really where this whole space goes. And I can't wait for the day whenever I buy a concert ticket and it's a NFT, or I I go to the grocery store and it's backed by a blockchain, and I scan the QR code and I can see which field the lettuce came from.
Yeah.
Um,
Oh,
and so
coupons could be NFTs and whatnot.
yeah,
So yeah.
absolutely. Starbucks points or airline miles,
I
they're
mean,
all exchangeable.
these use cases still exist. It's just I think it's just that the scale isn't there yet to actually facilitate. I mean, millions of transactions take place on scale, right? At scale in these points of commerce, and I don't think at this point blockchain is able to actually processes them all. So hopefully with with scaling solutions that we have seen in different blockchains, maybe one of them will take off, and we'll have something that can accommodate everything. But yeah, it is still a fascinating. Do you think that we are over the platform wars? I wanted to just basically segue into this because have you seen you know the narrow well, so we had Bitcoin, right? It was proof of work.
Hmm.
Now we have transitioned into proof of stake now, right?
Hmm.
Do you think there will be another form of consensus that would be faster, cheaper, and scalable and whatnot? Or are we done with innovating on the base layer?
No, I think that we're definitely going to have a version 4, if you will. and I think that Charles also alluded to that in one of his latest speeches. And think back to like what Emergo is doing. Um, so you can have, I would look at the papers that IOG produces as well, like proof of useful work. So you can have a proof of work network, but just because you're putting a problem out there that's a random algorithm that needs to be solved, why can't you also put out, um, here's all of the issues surrounding heart disease, solve heart disease, and put all of your computation towards that. And if it takes you 2 days, 3 days, 10 days, whatever, here's the reward at the end. Uh, I think that that's a huge, huge topic that can be furthered as well. And not only just proof of useful work, but like, let's say there was a network that had proof of work and proof of stake and proof of useful work and um, something that's good for the environment. Um, so I mean, I think that you're going to have a algorithm in the future that definitely leverages multiple uh, multiple consensus, and I think that's probably the next layer.
Yeah, that's interesting. Because to this day, decentralized networks, biggest problem has been the throughput, and whether that throughput could, you know, process the transactions that take place on a single country or in the United States or whatnot. If a decentralized network can easily process what we do in the US, then I think it would be a fundamental achievement, a milestone for it.
And I think
Um,
we're going to get there, but I think that's going to be a, no matter what the network is, I think that's going to be a layer 2. And I think at that point we're going to see ADA used almost just for hashing power. So we're going to use it as a transactional fuel, if you
yeah,
will, kind of like gas, I guess.
yeah. I mean, that's conceivable. But layer two, when people actually talk about layer two, it's usually means that the number of nodes that process these transactions is smaller, so you kind of um relax the security a little bit to get the throughput and whatnot. So
Yeah. So I mean, like let's say you're able to do uh, 100 transactions in a second, right? Or let's go crazy. Let's say you can do 10,000 transactions in a second. And so for those 10,000 transactions in a second on your layer 2 or even a million transactions per second, whatever it is. Then every so often you just use Cardano as a checkpoint. So
yeah,
every 30 seconds you come back in and check, check, check. And then once you see um, that there's an adversarial attack or something, then you're only going back 10 seconds, 30 seconds, what have you.
yeah. Well, I think I don't know. I think maybe we're seeing the exhaustions of all the things that could be built on the base layer, and whatever innovation that would come maybe will come on layer two. I mean, ZK snarks and all that, I think they started with layer twos.
Yeah, I
Uh,
look forward to snarks and roll-ups and things like
yeah.
that. I think that's a great innovation. Um, the other thing that I really look forward to is um, kind of like how BitTorrent, the more users you have, the faster the network gets.
Oh yeah, that's another quite an interesting concept that was supposed to be part of Cardano back in the day with Rena networks. It never
Yeah,
took off. I don't know. I don't know what happened there either.
yeah. So I was watching Charles's Q&A that he had at Web Summit, and someone actually brought up Rena to him.
Ha!
Yeah,
My near and dear to my heart.
yeah, and he said that the more they explored it, the more that they realized that they were going to have to change the hardware of the actual network. And so that really got my brain thinking in the fact that, okay, so if you had to change the hardware that everyone interacts with, and you have to change the actual network that everyone interacts with, and he he said that if Cardano went to, like, let's say, like a $300 billion market cap, then I guess I would be put it around like $10 or so. He's like, then the funding could be there in Catalyst to run Cardano from satellites and actually decouple it from the normal TCP/IP internet. And then you could truly run Rena through the satellites, but you'd have to have the proper hardware. But that got me thinking, and I said, well, where are they going to get the hardware from? Oh, wait a minute. They opened up a uh, a blockchain research facility in Wyoming, and their specialization there is supposed to be surrounded by hardware. And so the same way that we're seeing stuff come out from the University of Edinburgh, I think we're going to start to see stuff come out of the University of Wyoming around hardware. And I wouldn't be surprised that in the next 5 to 10 years, if we decouple Cardano from TCP/IP and have the hardware for it and have it satellites built up around it, funded by Catalyst. Like that, to me, that would be the ultimate. Like we're decentralized.
Yeah, I mean that's one of the other things that kind of fascinates me in this space is that you see these huge pockets of money um, that become available that could be used to basically fund innovation in open source. And I think as and when this space matures, we will see very mature companies like Microsoft's and things like that that will come and bid for contracts in catalysts. And I totally agree with that sort of vision where you basically have really sophisticated companies coming and working and building this network, and we as a community making these decisions about funding. So i- i- if
I'm
Rena,
excited.
if Rena can be revived, it would be such an awesome thing because you know there is no reason to kind of like live and be bounded by the technological decisions of the 20th century that were made and probably not didn't take into consideration the pace at which the traffic would grow, then the internet would grow, and knowing what we know right now, if you were to start with a clean slate, what could you build? And that requires a lot of money. That requires a lot of time and effort and people that could be made available through public funding through treasuries like the for the protocol of Cardano. And I'm quite excited about that actually. So hopefully, hopefully we'll see a lot of interesting projects that have real value in real life, funded by the treasury, and it will be life changing.
I think that that's a great place to end it.
All right.
Umed, thank you for your time. Thank you for your thoughts on this. If people want to support you, how can they support you or the projects that you're working on?
I don't need much support right now, to be honest with you. I think there are far more people with a lot of talent that are working day in and day out there that that require the support of the community. And I'm here as somebody who is trying to build awareness about the protocol and support it in any way I can and build relationships around it. um but yeah, yeah, I
Uh,
the fact that you guys exist is already a great enough reward for me. So but if I were to basically nominate people for support, I would say the ATADA stake pool operator. Martin has been an amazingly great actor in the space. He has created so many scripts and has helped with ledger integration, and has been very instrumental in many pivotal sort of points in Cardano. And I would urge people to support him. Andrew Westberg,
ADA.
ATADA, ATADA, yeah.
Okay. Okay.
And then Andrew Westberg is another person, a good friend who's been, also supporting the network and creating tools and being part of the community that has, his presence has been very beneficial for the ecosystem also.
Andrew's a fantastic guy, and I believe he runs the Blue Cheese Steak Pool.
Exactly, Blue Cheese Take Pull, and he's I think they run the drip drops also. Project Noom is another one that he's working on. I love Project Noom. Um, Mike, last but not least, Mike Fullman, my partner. Even though he's a quieter guy, he works night and days, and he's trying to make PTOOL a better tool. We are going through the harsh exercise of trying to figure out how to make money so that we could pay for the server costs. And I had to wrestle him to put some ads up there so we could ease their financial burden on us, to pay for the servers. So if there's a way you could support him, his pools, that would be greatly appreciated. But yeah, his pools are his pools are love. And then the pool tool itself has a new pool called PT001.
PT001. I haven't heard about that one yet.
Yeah, we just recently created it. It's directly tied to pool tool. It has nothing to do with me personally. So whatever funds that are being delegated to that pool will basically go directly to support the pool tool.
Good. Well, Umed, it was a pleasure.
Thank you so much, Reagan.
Yeah.
It was an amazing 1 hour and 40 minutes of conversation.
Yeah. Yeah, it was a lot of fun, and hopefully this this bear market doesn't last too much longer, so we can start with all the fun. And
Are you kidding me? Bear market is the time when we actually talk with real people. I love bear markets for that.
Did,
Only that the reason. I'm sure it's just that when the price is going up all the time, it's just very distractive to
oh yeah.
to talk.
And I mean, I think that we have a lot more to lean on in this bear market than we did in the last one. And so I'm comfortable. I'm just relaxing and hanging out.
Yeah,
And
yeah. Thank you so
it's
much for being part of the community. I appreciate your presence too.
yeah, absolutely. Thank you for as well being part of the community. Thank you for finding Cardano and being active in it. And so anyways, we'll leave it with that. Umed, again, it was a pleasure. Thanks everyone for watching. Like and subscribe if you like the content, if you hung around. And then yeah,
Thank you so much.
that.
Have a nice one.
All right, you too.